Australians flood to the stock market. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because I want to talk about this new research done by Dr. Angel Zung from RMIT University. So 435,000 Australians have joined the stock market for the first time in the last 12 months. Now, we've talked about this again. The articles have been written about it because, well, people are interested. They want to get in the stock market. People are at home. In July last year, there was, we were talking about people gambling on the market, and one famous example is Hertz, where all of these newbie investors just dogpiled into Hertz just as it was crashing right down. You know, they saw it. It was the assumption that it's a good company, and yeah, well, it kind of dogpiled down. Let's have a look, actually. Let's look at what Hertz is sitting at now. So we'll look here. We'll go to trading view. What was it? $1.46 HTZ. So let's look at it now. HTZ, Hertz Global Holdings Inc. 81 cents. There you go. Okay, so if you had have got in back here, you know, imagine if you bought it 160 bucks before it crashed, and now it's only worth 81 cents, everyone. This is the problem. Psychologically, you can have an anchor price. So if you see something that you're used to it being at a certain price, and then all of a sudden it goes down, you think, oh, that's great, that's a bargain, that's cheap, but you've just been anchored. That's why in negotiations, some people always say much higher price to anchor it. You know, I saw someone share a tweet where a plumber said, oh, you know, this guy was being a bit of a, you know, it was on Twitter, so he's been a bit of a twat, going about how, oh, plumber told me it'll be really expensive to make this repair, and it was only $250. Laugh, laugh, laugh. It was probably only a $50 repair, mate. You just were done. He anchored you at a higher level, and that can happen here. You can do that to yourself. You can see Hertz. Oh, it's like a much more expensive company. This can't be. Is this right? Is this? Well, yeah. Okay, there you go. It's wow. So it ain't doing too well, everyone. It is not doing too well. We'll look here at all-time high. Yep. There you go. So that's it, where people are just dogpiling into the market and to the stock market. A lot of newbie investors that are jumping in. So investment trends shows 435,000 Australians started to trade in the Australian share market for the first time in the last 12 months. This is driven by a number of factors: low interest rates, dramatic volatility in share markets around the world, government stimulus, and the emerging low-cost trading platform. Low interest rates make stock investment more attractive, and that's true. I mean, you've got it. What do I have? I've got a savings account, Rabobank, and they've just reduced my interest rates. I'm getting below 2%, like 1.5%. It's nothing, guys. It's nothing, but it's better. At least I'm still technically beating inflation if I pretend that the CPI is real inflation. If I pretend that's real, I will feel like I'm beating it. If I was at the Combank, I'd be earning 0.55. So it's understandable why people want to get into stocks. You know, why they want to invest in them. If we go to trading economics, we can see just how some of the markets are going. Some of the indices. You know, look at Dow Jones, look at S&P, look at NASDAQ. I mean, it's just going crazy. It is just going crazy. Money printer go brewer, everyone. It's the Candlelight effect. Money is plowing into these. I've started investing in US stocks. You know, my goal is to take pocket money, a little bit of money that Rachel won't notice. So, you know, my crypto money that I earn, or if I recycle bottles and things like that I find, scrap metal I find during the demolition work for the house, anything like that, anything at all, I'll just, you know, get it together till I get a good little $500 stack, and then I will go and find several different stocks that pay a monthly dividend. Because I want to just, you know, get the goal of just building up, turning this pocket money into $100 a month. That's the goal, just to slowly build it there. I'm not worried about price fluctuations. Sure, if we get hyperinflation and the shares go to the moon and the money that it's producing out is worthless, I mean, that's how it is. I'm not worried about that. I just want to use it to generate a little passive stream of just US money trickling in. every single month. And it's going to take me a while, honestly, with just, you know, the little bits of change I'm collecting together, but that's the strategy that I'm using. I'm not trying to day trade. I'm not playing the CFDs. The crypto is a little bit too volatile for me at the moment. So I guess if you're looking at getting in the market, you want to be quite sensible and at least have a strategy of what you want to do. I just like the idea of dividend income, of sitting there and, you know, just, it's not completely passive. You need to do your research, but that's kind of fun. You know, it's a hobby. So the fear of missing out and get rich quick are generally behavioral biases observed in retail investors. Well, we're seeing that in our real estate market. It's there. Low-cost trading platforms further fueled and lured young and novice investors entrance into the share market for the very first time. The prevalence of social media drives social trading, which concerns ASIC. People are giving unmoderated investment advice on social media such as YouTube, Facebook, TikTok, and Reddit. Well, I'm not giving investment advice. I'm sharing what I'm doing. Probably the most milquetoast investment strategy you can do. Buy and hold for the long term with money that, well, I won't even notice. So it's not like this is a significant investment. It's just money I won't notice. Maybe that's a good way to get used to it as well. Because you wouldn't want to go into a Hertz. You wouldn't want your, you know, huge share price to crash down. RMIT research shows around the world countries with government stimulus payments are associated with larger increases in retail trading volume. Yes, that is this here, the Cantillon effect. It refers to a change in relative prices resulting from a change in money supply. So you start giving people their gambling money and they want their tendies, and they're on Reddit. They don't care about it. It's free, stupid fiat money. They're just going to throw it at the market and see what happens. Why not? And then that money supply, it's the path through the economy. It looks like it's through the stock market in America. Here in Australia, a lot of it is at housing. The RMIT data shows countries with a larger gambling revenue prior to COVID-19 were associated with a greater increase in retail trading last year, since investors see the stock market as a substitute for gambling. Well, yes, we've seen that again and again. It's the gamblers that they're going into it. The rapid increase in share market participation highlights the importance of incorporating and enhancing financial literacy in education. Yes, I 100% agree with the doctor here. That is a very, very good point that we should all appreciate. I mean, what do we get with financial literacy here in Australia? You know, I mean, Dave Ramsey, he'd be angry at me. I'm buying stocks. He just wants you to get into mutual funds and ignore it. But I mean, he's got a strategy for paying down debt and for taking control of your life. What do we get anything at school here in Australia? What do we get in the media? In Australia, it's just houses, houses, houses. Investors who are not financially literate are vulnerable to social trading and could incur losses in the share market. And Dr. Angel Tsong is a senior lecturer in finance at the School of Economics and Marketing at RMIT. So there we have it. I mean, I'm on SelfWealth as well, and they've got this whole like social trading platform where you see how you're comparing to other people and all of this stuff. I use it for Australian shares, but at the moment I'm just looking at American shares just because there's more options there, more variety of things that pay you a monthly dividend. But a lot of them, some of them are real estate investment trusts, so I've got to be worried if there's a significant decline in the market, if that will manifest in some of these trusts. You've got a plan, you've got to take the risk. So there we have it, everyone. Hundreds of thousands of Australians have entered the stock market for the first time. Has that been you? How have you found it? Did you enjoy it? Did you lose money? Or are you just being nice, boring, and slow like me? As always, let me know your thoughts, opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I will see you next time. Bye for now.